It's been a while since we talked about ChargePoint, so I thought it would be time for a nice little update. So in this video we're going to talk about the tailwinds for ChargePoint, also the European expansion, some analyst ratings, and then some technical analysis, so let's do it! During the last videos about ChargePoint, we looked at the investor presentation, and on one of the pages in the investor presentation we can see this graph. And this graph basically represents what ChargePoint believes is going to happen to the amount of electric vehicles being sold as a percentage of the new cars being sold. So if you look, for example, at this graph over here, in 2026, which is the last bar over here, it says 10% EVs. So that basically means that 10% of the new cars being sold in 2026 are electric vehicles according to ChargePoint's estimates. Now you can also see at the right hand side over here some additional tailwinds. For example, the fossil fuel bans, for example, the transit electrification dates, incentive programs, but also major auto OEM brands committing to electric vehicles, and of course EV cost reductions and advances in battery technology. And one of these additional tailwinds could be the infrastructure right now in the United States. Now we can read over here that the current $1 trillion bipartisan infrastructure bill already contains about $7.5 billion in EV charging infrastructure funding. But there is also a group of 28 US House Democrats that actually asked congressional leaders to back $85 billion in funding for electric vehicle charging infrastructure. So this bill could definitely include a lot of money that could be set aside for electric vehicle charging, and of course companies like ChargePoint can definitely profit from that. So if we see more and more additional tailwinds like this one, like the infrastructure bill, that 10% amount, that percentage of 10% could definitely be way higher in 2026. And then the European expansion, because as we can read from the annual report from ChargePoint just a few weeks ago, I believe, Europe is expected to be a significant contributor to ChargePoint revenue in the future years. And we can also read that if ChargePoint is unable to penetrate the market in Europe, then the future revenue growth and profits may be impacted. So they can have different strategies here, of course. They can just try to grow organically within Europe. But as we can also read in the annual report from ChargePoint, however, ChargePoint primarily competes with smaller providers of EV charging station networks. So that basically means that there are many small companies here in Europe. I'm living in Europe at this moment in the Netherlands, and we see a lot of smaller companies, and of course a massive company like ChargePoint with quite a lot of funding, quite a lot of cash on their balance sheet. They could just pick up these companies and acquiring these smaller companies instead of growing the business organically. Also, the CEO of ChargePoint, Pasquale Romano, he also mentioned something, and he said that our continued investment in Europe is critical to our stated growth strategy. So that is why they have already started growing their business in Europe by acquiring more companies, or at least one company for now. And that company is Has2Be. Quite an interesting name for a company, but okay. They acquired, or ChargePoint acquired this company for 250 million euros. And this company Has2Be currently has a pretty significant market share, especially within the countries Germany, Austria, and Switzerland. I was actually in Switzerland just a few weeks ago. I didn't really notice many charging stations, but I suppose these are not just in Geneva, the city where I was, but also in other cities within Switzerland. And with regards to Germany, I believe that Germany has experienced or has been experiencing quite a lot of growth with regards to the amount of electric vehicles being sold. The company Has2Be currently has about 125 employees. They are basically the market leader in Switzerland with a market share of 80%, and they've got 40,000 managed charging stations, and they are operating within 45 countries at least. So now the question becomes, is ChargePoint going to go ahead with this strategy, acquiring smaller companies within Europe, or are they going to grow their business organically, or is it just going to be a combination of the two? Then let's take a look at some analyst ratings, because I was going through a few articles on Seeking Alpha, and the majority of the most recent articles are relatively bearish. Now there were 4 articles that were bearish, 2 of them being written by the same author, but the majority of these writers were complaining quite a bit about the valuation of ChargePoint right now. And I definitely don't disagree with them, because as you can see from my overview, from my own stock overview, you can see that the price to sales ratio for ChargePoint right now is about 40 if you look at the market cap being about $8 billion right now, and the annual revenue for 2021, the expected revenue for 2021 is about 200 million. So that gives you a price to sales ratio of 40, which is definitely on the high end. However, if you look at the analyst ratings from marketbeat.com, we can see that the current analyst ratings are relatively high compared to the current stock price. Right now it's hovering around $24.50, and we can see that many analysts give ratings which are way higher than that current price per share. We can see some analyst ratings, some price targets of like $29, $40, $39, $39, $30, and also a price target of $24 by the Goldman Sachs Group. But yeah, in general, these analyst ratings, these price targets are relatively high compared to the current price per share. So in my last video about ChargePoint, or at least the technical analysis for the ChargePoint stock when the stock was trading around $26 per share, I called a move to about $35 per share based on technical analysis to this beautiful blue box of resistance, which we're going to take a look at in just a second. Because as you can see from the graph right now, we definitely hit that beautiful target of $35 per share. We went inside that blue box of resistance and then used that as resistance and came back down quite heavily, way more heavily than I personally anticipated. But yeah, right now we are trading around this blue box of support. Let's see if that is going to hold. For the last few weeks, we definitely traded a little bit below that blue box of support. We found a new support level around $22.50, and we haven't really been trading below that level just yet. So I believe that level is going to continue to be quite significant in the future, $22.50 as a strong support level. If we look at some resistance, we are definitely experiencing some resistance right now, not only because of the 55 exponential moving average, which is this white line over here, which usually is quite a significant level of support or resistance, in this case of course resistance, and we are also being held down by the upper band of these Bollinger Bands. These Bollinger Bands being these green bands over here, and right now we seem to be running into that resistance of the Bollinger Bands, of the upper side of these Bollinger Bands. If we look at the indicators, however, it still seems pretty decent in my personal opinion. If you look at the RSI, we are trading back above the EMA on the RSI. So the RSI is this blue line over here, and it is going in an uptrend. And the white line over here is the exponential moving average on the RSI. Usually it's a pretty good sign when the RSI, so the blue line, is above this white line over here, as we can see. So let's see if the RSI, the blue line, is now going to stay above the white line and is going to be using it as support. The MACD seems to be very similar, the MACD being this blue line over here and the orange line being the signal line, and usually when the MACD is above the signal line, when the blue line is above the orange line, it is usually a good sign as well. So here as well, let's see if the blue line is going to continue to stay above the orange line or not. So because of the most recent price action and because of these indicators being relatively bullish, I wouldn't be surprised if we are going to get another move to the upside. I'm not entirely sure if we're going to go back to this blue box of resistance, which is between around $34 and $35, but I do think that we might go back to more or less like $30 to $31 per share. Now, of course, as always, keep in mind this is not financial advice or anything like that. This is just my own opinion, my own interpretation of the technical analysis right now. So you might wonder, what am I currently doing right now with ChargePoint? Well, ChargePoint right now for me is about position 7 or 8 out of 13 right now. I'm not going to be adding to my position at this very moment. I do believe the technical analysis seems to be pretty decent, but I also believe at the same time the valuation is relatively on the high end. So I'd rather add a little bit more to my other positions with a cheaper valuation instead. If we are going to go back to like $35 to that blue box of resistance we have been talking about previously, then I might take some more profits on ChargePoint. So in general, ChargePoint is definitely a good stock, but I do believe the valuation could be a little bit on the high end. So if you're looking for European competitors, for example, maybe check out Tritium Charging or EVbox, which right now have way better valuations than ChargePoint. However, there is definitely a merger risk over here. We don't know for sure that the merger is going to happen between TPGY and EVbox and between DCRN and Tritium Charging. So it can definitely happen that the merger is not going to occur. If you would like to know a little bit more about the current situation of the EVbox merger with TPGY, then check out this video over here. But if you have already done so, maybe check out my mission and my roadmap to execute my mission right over here. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!